Hello everyone, how's everyone doing? Hope as everyone has had a good Monday, and of course with safe trading. Today we're going to be doing another market review, and um, personally, I did not trade this day because Powell was speaking at 1 p.m. and we will get into more in depth of how that affected the general day price action. Although the morning session and the PM session were not the slowest, it was important to keep it in mind, especially for when you want to have the most efficient price action to work. Now I hope this video doesn't get copyright striked, because I do have some jazz playing in the background. I usually have it down, or sorry, I usually have it on whenever I'm doing my journaling. Um, and I thought that maybe you guys would enjoy hearing it too while I speak. So here we have the daily chart on the Nasdaq, and Tuesday's trading just opened up around 42 minutes ago. And here is Monday's trading. You see a clear manipulation wick with the rest of the day following higher, forming a high at 21,576.25 and then closing lower at 21,554.5. So let's really quickly drop into the 4-hour time frame. And the first thing that I want to do is cut off this candle here, just so you know we have a proper grasp on how they trade, where it exactly opened and where it closed. So just really quickly, I'm gonna chopping off because that's not supposed to be there. Okay, so here we have the 4-hour time frame. As you can see, we have midnight open at 21,231.5. We see that the low of the day was formed during London session during the 4-hour 2 p.m. candle, and this will be a lot clearer if we go on the 1 hour. So here we are on the 1 hour. As you can see, we have the previous week's settlement closing price of Friday 4 p.m. and then we also have 6 p.m. which is Sunday open here, giving us this new opening gap. Now this new opening gap will possibly be used further into the week. That's up to how my weekly outlook plays out. But generally on this day, it was not used as, importantly as other rates. So just for today, I will not be having it on. But if you would like to visualize where it opens and where it closes, we have the close at 21,369. Yeah, that's the close. Look at the figure here on the C, and then the open here at 21,303.75. So as price opens up on midnight, you can see we have the Asia ranged lower, trading inside of this fair value gap that we did close beneath, but then ended up reclaiming with the close of this candle, where the wick went back and turned to fill it again. Then from there we started to trade higher. But really quickly, I want to zoom in on London's price action. So 2 a.m. opens here. We have 3 a.m., which highly volatile wick, which forms the high and the low of the London session. We'll get into more of what happened there on the 15 minutes, but right now the important array that was vital for today's price action was this order block here that was formed at 5 a.m., which is just when London closes. So today, which is Monday, July 2nd, we had 10 a.m. Red Folder News as well as 1 p.m. Red Folder News, which was Powell speaking. So personally, I did not trade on this day, as I mentioned previously. And the 1 hour, 1 p.m. candle was pretty lethargic. Not much, but the thing that I want to focus on is this buy side liquidity pool, this sell side pool here, and as well as the reach in to this array here and how that plays into the kind of bigger story of what happened today. So if we drop down into the 15-minute time frame, notice we had this Friday high, which we did end up reaching. But the more important thing to consider is, what does the act of reaching this high really do? So this high, which is relatively close to a bunch of other highs, would be seen as an area of obviously resistance for retail traders, leaving pending buyers on top of this high and sell stops as well resting with the pending buyers. So as price at 9:30 runs up and runs this high, this obviously induces lots of buyers and takes out sellers of the market. And then with our 10 a.m. news, which what tends to happen all of the time, and I've mentioned this before on this channel, is that usually with 10 a.m. Red Folder news, even if there is 8:30 Red Folder, and even if 9:30 did manipulate away from a drawn liquidity, this would usually happen. 10 a.m. Red Folder news would also manipulate. And in this case, it was very interesting on what exactly happened. So running this high here induces early buyers and takes out sellers from the market. And then this can be counted as the initial manipulation, which for the main reason that it did manipulate. But then during 10 a.m. Price opens and it quickly runs down beneath this low, running inside of this array, but failing to move into the net open. The main reason that I believe that it failed to move beneath the net open was generally for the reason that we were already in a discounted price range, and price movement beneath the net open would have been nice, but it was not granted, and this does not mean that it makes the move any less valid. I would say that the run maybe beneath these lows here would have been a kind of, I think, to reaffirm the idea that we were going to be using the 10 a.m. run as manipulation. Because as this was happening, the lead up to it, which we will see on the lower time frame, was very bearish. The order flow was clearly bearish. But the more important thing that I want you to pay attention to, especially within the run from 8 a.m. to around, let's say, 1 p.m., is what can we derive from this move? Using the idea of the secondary manipulation, the case where we have a manipulation in both directions, and then we obviously, as a consequence, form a breaker, which we can engulf and then use as our order block. Let's take a look at what happens here. So, running above this high, it's the first stage manipulation. We induce early buyers, we take out sellers, and then what happens as we run this high? People are now in longs, and sellers are now out. What happens? We run lower, and then within this candle, we induce sellers. Sellers that were stopped out here are often inclined to enter shorts again after being stopped out. People who were just long are now being in severe drawdown with their stops at swing lows. That's what we've all been taught, especially with SD concepts. Now, with this second stage manipulation, which is where it gets its name, we get obviously the second manipulation. We run beneath these lows. The people who were short with this run lower were inducing to early shorts and are going to be obviously just destroyed with the price action that follows, as well as the run on this low, which did induce sellers, especially these zones here, since they're very relatively equal. You can see that the run beneath this low, and you can see how obviously it would induce pending sellers beneath this low, and the buyers that were induced with the run on this high obviously have their stops beneath this low. So now both sides of the market have been taken out. The purge on this high induced early buyers and took out sellers. The run lower towards this low induces early sellers. The run beneath this low induces more sellers, and then from there the stops that were placed when price ran this high have now been triggered, and now buyers are also outside of the market. Logically, through what I've just said, it would make sense in a clean piece of paper that we start to move higher now, since more sellers and buyers were targeted within this run, because it did end in a bullish turtle soup. Now, the run lower that happened touched this overblock would have been a great position to look for longs if we did move that open, but that's just for me personally, and whoever is watching this may have a different model that would have allowed you to trade on this day. But following what I said about the secondary manipulation, is that it comes with the formation of a breaker, and then the formation of the breaker, and then the engulfing of a lower, which gives us an overblock that we can use to take higher. So as you can see, low, which is the initial sell side, the high, which runs the previous sell side, then we have the lower low, and the initial sell side, creating a new high resistance low. Then from there you can see that price started to pick up and engulfed this lower, which gives us an overblock. As you can see, if we do draw out the wick and body, that price respected, and especially with the small retracement that we had lower here. You can also say that we also ran into this mitigation block, that if we do draw out the consequent encouragement level, see that we didn't quite move into it, but the point's still there, that we are now using the run lower as a price leg to support price higher. So let me draw out this kind of stuff. If we want to get more precise, I can move into the format. But let's do that actually. Yeah, so if you guys watched the Advanced Breaker Block Theory from my C2022 he says that the final up close candle of the high leg in a breaker is going to be the most sensitive one, but in this case it did not work out. Obviously, as he perfectly said, but we can't really blame him, because nothing in trading is 100%. We're working on probabilities here, and you should be okay with it. But what I do want to mention here is sorry, I'm just trying to comprehend looking at it. I had the Fibonacci and what exactly? Just lost myself there. Oh yeah, we had it on there today. Okay. Drop it to 1 minute. You see, it's dragged out in time. Price usually, the price accumulated at that point, but all the while finding support within this fair value gap here. And from there we went higher, fully engulfed that wick that we had at that 50-minute gap. You can see price starts to work its levels, the 0.75, 0.5 here, 0.5 again, and from there we start to see heavy displacement. And if we quickly take a look at the 2 p.m. or sorry, the PM opening range, you can see that went from 130 all the way over to the PM. There's no fair value gaps created except this one here. Let's draw that out real quickly. Notice how that gap is used, the PM opening range gap, used to take us higher through the 0.25 level of the city, and then here during the closing of the macro, 345, remember, not much of it actually. It was only until after 4 p.m. open, or sorry, 3:54 during the last 5 minutes of the final hour where we should pick up, and then from there we waited until we closed. We take off replay mode, this is where we are currently, and that's generally today's price action summed up. We generally just continue to move off of where we were supposed to move, or not supposed to, where we predicted that we'd move in the previous week, which is the breaker here. But you can see Monday picked up and we closed through the rejection block here. Sorry. And there, right now what I'm expecting is the premium and consequent. Now obviously there is some more discretion behind it, but in a nutshell, this level is where I'm expecting next. Anyway, I think it's way easier for me to continue market reviews on TradingView directly and just talk on the way. The only thing that I'll be missing is, your guys' attention, because when I am making the slideshow, it usually is a lot quicker and it's straight to the point, and everything that I want to say is already highlighted, and it's after the fact. It's after the fact that I went through what I wanted to say. It's the screenshots are exact, but honestly, I enjoy market reviews like this. It allows me to speak freely, and if new ideas pop in my head while making shorts, that always helps. But again, if you guys would like me to return to the slideshow, I will gladly return to making the slideshow. I hope everyone enjoyed this video. I hope we all learned something. I hope we were also able to pick up things that I was able to pick up. And if you picked up more, I would gladly and enthusiastically be able to accept that information. Feel free to leave a comment if I did miss something, or if something should have been brought to my attention and I should have probably mentioned. So thank you all for watching, and as always, Lord willing, be safe.